Today we live in a world where all of our assets and bank accounts are under constant surveillance. These days it's extremely difficult to own anything without being tracked, so in this video we are not going to encourage you to commit fraud depending on your country of residency or citizenship. You may have to report your assets, but sometimes below certain threshold, maybe you don't. And that's where you can take advantage of this, as we will share ideas, reflections, and strategies to increase your privacy, without the states that often don't have your best interests at heart constantly breathing down your neck. Clearly, if you are in the European Union or Latin America, the main threat is CRS, since tax authorities there can access your bank data and annual transaction and the click of a button. Many people feel comfortable keeping part of their wealth in CRS countries, even know that local tax office can see it, because it's not as damaging as having it exposed to their home country's tax authority. Of course, if you are a US resident or a US citizen, you are fucked because you have FATCA, and FATCA tool doesn't care where you live, doesn't care where you stay, they are going to threat you. So moving again into CRS countries, which countries should you choose to have an anonymous bank account outside CRS? Currently, most countries already participate in or will soon join automatic information exchange, but a few remain where you can still take advantage of the gaps. Many of these are countries where you wouldn't even trust placing a single cent, but others are very interesting, like the US for non-resident, which doesn't participate in CRS and has a powerful banking system, with credit cards, fund mobility, and so on. Other interesting options: Armenia, Cambodia, Laos, Dominican Republic, Paraguay, and depending on your tax residency, your home country might not have a bilateral information agreement with them. That means your money there could stay fully shielded. The second way to bypass CRS is simple: to become a tax resident in a CRS country that doesn't report your information as long as you are a tax resident there. For example, if you have an account in Dubai but you are not tax resident there, Dubai will report your data. Many people become residents without being tax residents and they end up receiving their own information from Dubai, meaning it's not reported. But this is risky because if the banks ask for your tax residency and you provide a false one, you could be in trouble if you are caught. That's why the idealist scenario is to change your tax residency away from a tax-aggressive country. Then it won't matter if the bank reports or not, as long as the new country isn't so aggressive either. The third option is to become a resident of a country that still upholds banking secrecy. The classic example is Switzerland, which had a strong banking secrecy until a few years ago, but now not so much. Of course, you can get this strong banking secrecy, but maybe if you have an account in a trust, not at personal level. However, the same level of protections now exists in the Philippines, where a law from 1964 still protects accounts held in foreign currency. As long as you are not committing crimes, no one has the right to access your information, so it's still one of the most private banking jurisdictions in the world. Then there is cash, which is almost the only viable alternative if you want to stay within fiat currency but outside the system. Other options, like anonymous prepaid cards, are disappearing or very hard to obtain. Cash has pros and cons. On the plus side, it's private. You hold it, no third party like a bank that can freeze your account overnight, but it also carries risks: theft, loss, fire. There is also inflation. Cash doesn't grow, it doesn't move, it doesn't earn. And then there is mobility. If you travel carrying more than 10,000 euros or dollars without declaring, it is illegal in most countries. Moving large sums is very difficult. Another problem is that with digital euro or other CBDCs rolling out soon, things could get ugly. People who understand the dangers of digital euro are still a minority compared to those who just don't care. Philosophically, I support cash. It gives you direct control over your money, but having too much cash is inefficient. Many people convert it into crypto instead and then use those assets for legal or illegal activity. Each person takes their own responsibility. Since we brought up crypto, let's go deeper in that topic. Like cash, crypto lets you hold money without intermediaries. What I love is that no one can stop you from withdrawing. No one knows it's yours if you keep it in a wallet and not link it to your identity. You can send your money from address to another without asking anyone for a permission. That's the magic of crypto. However, if you use centralized exchanges like Binance, Kraken or Coinbase, which are fine for getting started, you must understand that once you buy crypto, you should take it out. Leaving it there is like leaving money in a bank. They can freeze it, ask for verification, XYZ, especially in Europe, with the strict regulations implemented last year and more coming soon. The ideal move is to transfer your crypto to a personal wallet like Trust Wallet on your phone on a hard wallet like Ledger. There you have total control, but that comes with responsibility. If you send it wrong, there is no one to help you to recover it. If you are more advanced, you can buy crypto on decentralized exchanges without KYC or through licensed OTC DEX that don't automatically report. Some even use mixers to obfuscate their crypto's origin, though that's more complex and often used by people wanting to launder money. I don't recommend using mixers because if you ever try to cash out, almost no one will want to touch crypto that's gone through one. It's instantly flagged as tied to scams, money laundering or other illegal activity. But if you are never planning to convert that crypto back to fiat, then it can be an excellent privacy strategy. Of course, if you know what are you doing, crypto can offer very high levels of anonymity. Another option widely used by those who want to exit the traditional financial system is to invest in precious metals, especially gold, which at the time of recording is trading at all-time highs, and also silver. There are lesser known options too, like platinum, palladium, rhodium, which often go unnoticed at customs. What's interesting here is that just like with crypto or cash, you can own value directly without depending on any bank. You can store the gold yourself or use companies that keep metals in secure vaults around the world. We work with several in Dubai, in the UAE, like HBS, PR, which don't share information with banks or anyone else. The only way they will give access to your belongings is if Dubai police had a court order and knew you had a vault there. Otherwise, they report nothing to anyone. That said, be careful doing business with a local who might try to harm you. We also have trusted providers in Singapore like the Safe House or Switzerland, such as Swiss Gold Safe. One client even mentioned a facility in Liechtenstein. In Switzerland, you can even store up to $15,000 without completing any KYC, and you can do it fully online without leaving home. You can store anything you want, as crypto wallets, maybe gold, maybe precious metals, luxury watches is an interesting option too, antiques, sentimental valuables, even your wallet seed phrases. But be careful, because in countries like the US, there have been cases where the FBI raided private safety deposit boxes and took everything, sometimes even without a court order. But it's important to understand the context, whether the person was a US citizen or permanent resident. If you prefer to store the gold at home, many of these companies can also ship it physically to your address. The big problem with gold and precious metals is always mobility. If you travel to Turkey, to Emirates or anywhere else to buy gold and then want to return home, you can only legally carry $10,000 worth without declaring it. So yes, there are limits, but as an alternative to fiat and the traditional banking system, gold works very well. Now let's move on to a more elite category: luxury watches, precious stones, art and collectibles. The upside, these assets are very portable. You can cross a border wearing a $50,000 watch and most custom officers won't even notice. But if you bring the box or paperwork, then things can get tricky. So the more discreet you are, the better. Same goes for precious stones. Depending on their size, they are almost impossible to trace and allow you to store massive value in something tiny. Some stones are smaller than your fingernail, can be worth millions. Same thing with high-end watches. But there are also downsides. First one, volatility. A watch might drop significantly in value over time or go up. The second one is liquidity. It's not easy to find a buyer for an expensive watch on short notice. It's not like gold or crypto, which you can sell 24/7. The third one is expertise. This is the biggest issue for anyone. If you don't know what are you doing, you might end up buying fake watches or worthless stones. In the watch world, only 5 to 10% of models retain or increase in value. The rest lose value the moment you leave the store, like a new car. As for art, forget it. It's not just about knowing whether a piece is authentic or not. You are betting on the artist's future, their career, whether they will become more valuable. It's an even more complex world. So yes, it can be interesting, especially because you are surrounded by beauty and can enjoy what you own. But for me it's the riskiest and most difficult option of all the ones we have covered in this video. And realistically, this category is only for people with substantial wealth, because it makes no sense to put all your money into watches instead of gold if you know nothing about either. That said, if you are an expert in luxury watches and know the market better than anyone, maybe it's a good idea, but personally, I don't think so. For those who want to take a confidentiality to the next level and escape even further from state overreach, there are legal tools that add multiple layers of protections. Now we are talking about trusts, foundations, and opaque companies. The most secure ones are found in Nevis and the Cook Islands. These are very powerful structures, but also very expensive to maintain. If you are looking for something more affordable, you can go for places like Panama, where private foundations are very effective for asset protections. However, be aware of the hype being sold around this, because if you are in certain countries like Spain, France, and you operate your foundation incorrectly, you could get hit with CFC rules that pierce the veil and make you pay personal income tax. Another great option, especially if you want something simpler and with less paperwork, are US LLCs formed in Wyoming, Delaware, or New Mexico, where owner records are not public. Of course, this option is for people that are not US citizen or US resident, because this adds not just privacy, but protections from creditors, lawsuits, and data leaks. These types of structures are also very useful for passing down wealth, because doing it through the trust, foundation, or company is far more efficient than just having over assets as a private individual. And if you really want to level up, you can create layers within layers. For example, assets owned by a company, which is then owned by a trust or foundations. In the end, the limit to this search for privacy is your lawyer's creativity. That's why we discuss these structures on our channel, because they are quite complex and require serious planning, strategy, and capital. Well-built trust in the Cook Islands can cost between 10,000 and 50,000 euros, plus additional fees if you want a legal trustee firm that charge a percentage of the asset or a fixed annual fee, along with a protector, holding companies in Cayman or BVI, bank accounts, XYZ. Remember that diversification is key. If all your assets are exposed to your government, a war or sanction could wipe out everything, just like what happened to Russians and Ukrainians. Everything I have shared here is just the tip of the iceberg. Many people go further by combining this with digital anonymity, residency permits in other countries, second passport, or even changing names and renouncing citizenship altogether. But those are much more complex topics and definitely deserve their own discussion. Finally, if you are thinking of changing your tax residency, getting a plan B, acquiring a second citizenship, or banking large amount of crypto tax-free, on doing it properly from the start, remember, you can fill out the form in the description and we will get in touch with you.